This is an ETH 3-hour power 2.01 alert. It's a great example of something that officially went down as a loss, but there were a couple different ways you could have played it, either one, to avoid the loss completely, or two, to actually turn it into a winner. Let's look at what was going on at the time of the alert. We had just come off this meltdown. The SMA 200 is in white here, so from the point that we lost it with some increasing volume, if we take the wick low, it was basically a 19% meltdown. During that time, we attempted to recapture the SMA 9, rejected. Now at this candle close, at this candle open, we're getting an alert saying potential long. Under these circumstances, you have to look at it with some skepticism, some caution, because it hasn't closed back above the SMA 9. There's no new behavior being offered here. So you look at it and say, all right, maybe. If you had just played it blindly and entered immediately and used the stop loss close below value, you lost on the very next candle, and you write off meta signals and you say, you know, totally useless. I lost on the next candle. I could have just shorted. Okay, yes, you could have in this case. Let's take a look at it from a more rational perspective. So one thing we like to do is flip down to the lower time frames when we're looking for an entry. The lower time frame, it becomes even more obvious what's happening. We have the EMA 21 in yellow on the 1 hour. It's been rejected during this initial meltdown, attempted to get back above it, rejected, another leg down. Now at this candle close, we're getting the alert on the 3 hour. Again, we're right up against the EMA 21. So a very simple thing you can do here is say, all right, you show me chart, give me a close above the EMA 21, and maybe I'll consider entering. You can set an alert for that in TradingView. You don't have to sit here and stare at the screen. But if your rationale for approaching this is, look, we've had this huge meltdown, I want to see a close above the EMA 21, which has clearly been governing the trend, before I consider entering. So you don't get it on these next candles, right? And therefore you don't enter. You're looking for some form of confirmation to long after this long downtrend. On the 3 hour, the very next candle closes below, but if you're looking at it from the perspective of the 1 hour, you never got that 1 hour close above the EMA 21, so you never took a trade, or you never considered looking for an entry, and you avoided the loss completely. On the 3 hour, when you get that close below, yes, officially it's a loss. But again, you didn't see the 1 hour close above the EMA 21, so you didn't take the trade. You could say, well, it closed below. This was the level offered up by the alert card. It closed below, therefore it's over. I'm going to go look for a different trade to take. But very often what happens, look, we're in early beta, right? The levels for the stop loss close below are not perfect. Here you see it was extremely close. You know, we're talking like $10 or something on a $3,000 asset. So the close below level, extremely close. Yes, officially that would have gone down as a loss. But let's flip back to the 1 hour. We can say, again, officially lost, but show me a 1 hour close above the EMA 21 and maybe I'll be interested. So here you get that close above. In the context of this chart where it's just been down only for quite a while, you don't need to rush in. If you had rushed in and entered immediately, this close below level offered by the alert now saves you because you're not bothered by this wick. If you see this close many times, you'll be able to enter on the SMA 9 in magenta here. but again, kind of a nasty wick. But if you're using the close below logic, you wouldn't have been knocked out. Once you enter here and use this same close below level, it's just a matter of hanging in there. And you see we come up out of it, back on the 3 hour here. Target 2 is taken. Again, it's coming off of a downtrend, so if you want to be more conservative, you could have easily just outlined this area here where things broke down here, perhaps gotten out like basically at a perfect level before it ran back the other way. So this is just a good example of where, yes, officially one candle and it's over, you lost. But if you had waited for confirmation on the 1 hour, you would never have been in this trade initially. If you had waited to enter when the 1 hour finally showed some sign of strength, being the close above the EMA 21, you look for your entry, and suddenly you have a winning trade. I know a lot of people don't like to hear it. The alerts are a call to action to assess a setup. You know, part of assessing a setup is looking for confirmation, looking for a better entry. Yes, if you trade blindly over time, you should come out ahead because you're gambling with an edge effectively. But if you can apply a little bit of basic TA and you have a little bit of patience, you can avoid losses and turn losers into winners. Oftentimes, the algos are seeing something. Maybe they didn't nail it perfectly, as is the case here, but they did correctly foresee a potential move in price, which came if you were just a little bit patient and applied some basic TA